We're starting off with a developing story that's been unfolding in the Middle East, where tensions between the US and Iran continue to escalate. Reports are emerging of fresh strikes by the US on Iranian targets, which have been met with retaliatory attacks by Iran on American military facilities in Bahrain and Kuwait. According to sources, Iran's Revolutionary Guards have claimed responsibility for targeting these facilities, as well as destroying radar systems in Oman and striking fuel tanks and ammunition depots at Prince Hassan Air Base in Jordan. The strikes mark an escalation in the tit-for-tat exchanges between the two nations, which have been locked in a dispute over control of the strategic Strait of Hormuz. The U.S. has maintained that the strait remains open to commercial traffic, despite Iranian claims to have closed it off. However, the situation on the ground is complex, with reports of reduced ship traffic and heightened security measures in place. The U.S. President, Donald Trump, has suggested that an interim deal between the two nations may be at risk of collapsing. As we navigate this complex and rapidly evolving story, it's essential to consider multiple perspectives and sources. We'll continue to monitor developments and provide updates as more information becomes available. For now, it's clear that the situation in the Middle East remains highly volatile, with significant implications for global trade and stability. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're exploring the world of finance and technology, and our next story takes us into the realm of India's IT sector. Today, we saw a significant surge in the shares of major IT companies, including Tata Consultancy Services, HCL Technologies, and Infosys. The Nifty IT index rose by over 4%, with TCS being the top gainer, rallying more than 6% after announcing a multi-year deal with ABB to transform global network operations using artificial intelligence. This partnership is expected to improve user experience, enhance operational efficiency, strengthen security and compliance, and prepare ABB for next-generation digital operations. HCL Technologies also saw a significant jump in its shares ahead of its quarterly results announcement later today. The company is expected to report a sequential weakness in revenue but resilient margins, supported by favorable currency movements and cost efficiencies. Other IT stocks such as Tech Mahindra, Infosys, and Mphasis also gained significantly, with some rising by over 4%. This surge in the IT sector can be attributed to various factors, including improving momentum, technical indicators, and derivatives data. However, it's essential to consider multiple perspectives and potential risks before making any investment decisions. As we navigate this complex landscape, it's crucial to remain informed and adapt to changing market conditions. The IT sector is a significant contributor to India's economy, and its performance can have far-reaching implications. We will continue to monitor these developments and provide you with timely updates and analysis. Welcome back to the Riskwiser Zone. Today, we've been discussing various market trends and investment opportunities. As we wrap up this episode, let's take a closer look at the jewelry sector, which has been making headlines lately. The industry has seen a significant surge in growth, with major players like Titan Company and Kalyan Jewelers reporting strong sales and expansion plans. According to experts, the growth momentum appears sustainable, driven by increasing demand for organized retail and the formalization of the industry. International brokerage Nomura has maintained its buy rating on Titan Company with a target price of Rs 5,000, implying a 9% upside. The brokerage believes Titan is well positioned to continue outpacing industry growth and raise its market share to 10% by FY28. Meanwhile, Citi remains bullish on Kalyan Jewelers with a target price of Rs 750, implying a 58% upside. ICICI Securities has also maintained a buy rating on the company, citing its franchise-led expansion strategy and asset-light model as key drivers of future revenue growth. However, it's essential to note that the jewelry sector is not without its risks. Fluctuations in gold prices, changes in consumer sentiment, and increasing competition from online retailers could impact the industry's performance. As investors, it's crucial to approach this sector with caution and conduct thorough research before making any investment decisions. While some experts believe B2B jewelry manufacturers are better placed to outperform over the next 12 to 18 months, others argue that organized retailers like Tata and Kalyan jewelers will continue to drive growth. Ultimately, the key to success in the jewelry sector lies in understanding the complex dynamics at play and making informed investment choices. As always, it's essential to maintain a balanced portfolio and diversify your investments to minimize risk. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe. And until next time, keep your finances in check.